How many times have you refinanced or repriced your own mortgage, Clive?
Many times. 4?
4 times?
5 times, maybe.
Wow. Hey there, it's Andrea Heng and welcome to the Money Talks podcast. And we are bringing you yet another edition of Money Talks Explains. This is where we find an expert to answer your burning questions, anything related to money and personal finance. Today, we are tackling mortgage. When should I refinance it? Why should I refinance it? What do I need to know when I refinance my mortgage loan or home loan? Let's ask Clive Chng. He's Head of Relations at Redbrick Mortgage Advisory. Hello, Clive.
Thanks for having me here again. Very good to see you again.
So let's start with the basic question. What does refinancing your mortgage actually mean?
Refinancing means taking your mortgage loan out from Bank A and moving it to Bank B.
Right.
Repricing, which is what people hear as well,
Yes.
it's moving to a different package within the same bank. So refinancing is taking out the mortgage entirely and moving it to a different bank itself. So that's the action of refinancing.
Okay.
And generally people do that to save on interest, basically.
Okay. Right. We want to take advantage of moving interest rates, basically.
Yes.
What about when it comes to HDB owners? What happens there when we reprice or refinance our mortgage?
So the act of repricing or refinancing is usually prompted most times because you want to save interest. The current package that you're on, you're out of the lock-in period, and
Right.
generally when that happens, you'll be slapped with a higher interest rate. So in order to save some costs, bring down the monthly installments, you want to refinance it to a different interest rate, usually lower, of course. Or sometimes if you do have different requirements, so for example, certain clients are looking to pay down on the loan. Certain clients are looking to sell the property in a year or two, for example. They would like to refinance to a different package that allows them to do that.
Right.
Because there's usually some constraints when you move to a package like paying down. You might get some penalties. Selling of the property, you might get some penalties as well.
Oh, tell me more.
So generally when you're within the lock-in period, we consider that like a bond,
Okay.
right? So you're bonded to the bank for a couple of years. And within these 2 years, if you want to pay down on the loan, the banks are going to charge you a penalty, usually 1.5% on the amount that you're paying down.
Right.
And if you're selling the property, they're going to charge you 1.5% on the entire outstanding loan amount. Right. So if I'm a client who is already coming out of my lock-in period
Right.
and I know I'm going to sell the property in a year's time, I want to find a bank that helps me save interest is number one, but allows me the flexibility of selling the property within the lock-in period, but they waive off the penalties for me.
Oh, that's possible.
Yeah. So that's certain features that the banks offer. So you got to find the right bank that gives you that feature. Then you save some monies lah.
So does that mean that that very first bank that I go to secure my mortgage loan, that has to be the one that's super well thought through?
Definitely. There has to be much more considerations than just looking at interest rates. You want to make sure that you're looking at everything holistically before you make a decision in anything. Because after all, you're talking about mortgages, and mortgages are one of the largest financial commitments that anyone would have.
Have you seen HDB dwellers doing a lot of this, or does this happen mostly in the private residential sector?
It happened more commonly in the past, and that's because interest rates in the past were much lower. Right. Today, interest rates are very close to what you'll be paying for HDB loan. So HDB loan charges you 2.6%, which is 0.1% above whatever they're paying you in the OA, right? So in the past, when interest rates were higher, it doesn't really make sense, to go with a bank loan. I'll just take a HDB loan.
Correct.
Yeah. But if you have taken an HDB loan in the past and moved to a bank because banks were lower, it's an irreversible decision.
Yes, I remember this.
You have to stick with the banks. HDB clients would still have to refinance to other banks. But yeah, if you're buying a new HDB and interest rates are higher, usually they'll just go for HDB loans if you qualify for it. But these days, because interest rates have been coming down, so new HDB purchasers or new HDB owners are looking for bank loans as well because they do anticipate that rates are going to come down a little bit further.
So going back to some of the considerations you talked about, I suppose the big picture, the long-term view, let's get into the details of that.
Yeah.
What about considerations like tenure, affordability?
Let's start at the very beginning,
Sure.
okay? When you purchase a property, the requirements are usually a little bit more stringent. So in terms of your loan tenure, for example, the maximum loan tenure you can get for HDB, if you qualify for it, is going to be 25 years, right, when you start. When you refinance the mortgage, there's an ability for you to actually lengthen the loan tenure. You can actually do that.
Okay.
And people would be interested in doing that because when you lengthen your loan tenure, generally your monthly installment comes down.
Yeah.
So people, for example, business owners where cash flow is really quite important, you want to lengthen the loan tenure just so that your housing loans, your mortgage burdens aren't as high.
Just more manageable.
Exactly. So you manage the mortgage that way. Of course, is there a downside to that? There is, because you're stretching your mortgage over a longer period of time.
Correct.
You end up paying a little bit more.
But is it really a lot more?
It's always based on individuals' circumstances. For example, if a business owners know that, I need a cash flow in the shorter term, they may lengthen the loan tenure first, and then maybe a couple of years later, they can still shorten it, right? So it's something that you can still move around, quite flexible.
So flexibility is the name of the game here.
Correct.
Okay,
correct.
so what then becomes the benefit of repricing? Obviously, to take advantage of interest rates is one of them.
Yeah.
How will it help me then in the short term and then the longer term as well?
Yeah. So the mortgages in Singapore actually forces, in a way, people to refinance. Because if you look at the mortgages in Singapore, let's say for a fixed duration, okay, your interest rates are fixed usually for 2 years or 3 years. There may be certain packages at different points of time that would fix your rates for 5 years, but that's like the longest we've seen. Usually it's 2 or 3 years. Unlike like the US, where you have like 30-year fixed mortgages and stuff like that. So what happens after you are out of the lock-in period, after 2 or 3 years,
Right.
generally your interest rates usually shoot up.
Okay.
Right? It's always based on a variable rate
Right.
plus a spread, or what we call like the bank's profit margin.
Sure.
So in that sense, when your rates are going up after the lock-in period, you would have to look around, every 2 or 3 years. So that's the act of refinancing becomes very common in Singapore. And that is what usually prompts people to look at the rates. Whenever they receive a statement at the end of the year, or they receive a letter
Time
from
to
the
go
banks,
shopping.
Yeah, it's time to go shopping for cheaper rates.
But it's the kind of shopping that sounds and feels a bit troublesome, though. I mean, at the back of my mind, I'm thinking every 3 years I have to do this.
Yeah.
How do we
Yeah.
get over that inertia? I mean, is it going to be worth it?
For the most part right now, the processes from the banks are much more streamlined.
Okay.
As compared to the past. So if you're refinancing in the past, and let's say you have like 10 credit cards, they'll request for all of your statements, or all 10 credit card statements, which is a hassle to do so. In today's context, we do away with that already, so it becomes much more streamlined. And a lot of banks are adopting like an online application where majority of your information can be downloaded via SingPass. So that cuts short the entire application process. Those are for straightforward cases. If you're in a more peculiar scenario where, maybe income, you have several sources of income, then maybe we have to go through that manual process, and it still has to be a little bit more tedious. But rest assured that I think in today's market, a lot of things has been streamlined already.
What's a drawback of choosing to refinance or reprice my home loan?
If you're out of the lock-in period and, at that point of time in the market, interest rates are low, and you realize that if you don't do anything, interest rates are actually lower than what's being offered out there in the market, it just remains status quo. There's no need to refinance. So usually refinancing...
Yeah, don't do it for the sake of it, right?
Exactly. So usually refinancing is being prompted because, there's an action that you need to take, and usually it's because of high interest rates. For the most part, that's why we do a refinancing.
Okay. Is there a limit to the number of times I can refinance or reprice my mortgage?
Nope.
Limitless.
No, as long as you have a mortgage and once you're out of the lock-in period, you can, okay, maybe let's talk about the extreme, okay?
Yeah, sure.
Usually the banks have a minimum loan amount of $100,000. That's the threshold. Anything below that, they may not want to refinance you. So that's where you would be, in a way, stuck with the same bank that you're with.
Because it's not worth their while on the bank's part, right?
Besides, I think interest rates won't be as awesome as well. So usually once it's below $100,000, you've got to start thinking, okay, now because I can't refinance, and generally interest rates will be higher, so you got to start thinking, is there an ability, you do have the ability to maybe pay off the loan, just to save on interest.
Yeah, I think that's a fair point. What's a common mistake or misconception people have about refinancing or repricing the mortgage?
Oh, okay. People think that refinancing, it's like a whole complicated process, like a rocket science or something like that. Actually, it's a very simple process of just moving your loan from bank A to bank B. Some people also think that, hey, Clive, I don't want to move out of HDB loans. into a bank loan because I can't use my CPF to pay for my monthly installments.
Yes.
You can actually, right? So it's a common misconception that you can't use your CPF monies to pay for your installments. You can actually, even for a bank loan as well.
Right.
Right. So once people know that, then, actually moving into a bank loan, the terms and conditions, granted in the initial stages are not as flexible as a HDB loan where you can do anything you want, right? Pay down and sell the property any point of time.
Yeah.
But generally, the incentive of moving to a bank loan is because you get cheaper interest rates.
If I lose a job,
Yeah.
have a baby, these are life changes. Is this a common trigger point for some people to think about refinancing their loans?
Yeah, definitely. I think some things you can plan. For example, if you are going to deliver, right, and you know when is your expected date of delivery, and some people just want to take a break, from work. And if you have the opportunity to refinance first, then probably do that first, right? But that said, again, let's say if you're caught in a situation where, you're out of your lock-in period and it so happens to be a period of time of transition. Let's say you're finding a different job, you're looking for something, or maybe you're taking a break like a sabbatical.
Right.
Well, the banks are still quite forgiving in that sense.
Okay.
Right? So if the property mainly is for your own owner occupation, you're staying there.
Sure.
Refinancing, the requirements become a little bit more relaxed.
Right. So
there
they're more lenient.
Yeah. So there are even some banks that says that, even if you're not working, as long as you have a good credit score, meaning to say, you've not been late on your bill payments and everything, I will still be able to refinance you. I mean, they're quite flexible. And as long as you prove that you have the ability to service the loan, right? Generally, they're quite okay.
That's interesting. That's new for me. When's a bad time to refinance?
I think that's okay. So a bad time to refinance.
Obviously, when interest rates are high.
I would think a bad time to refinance is when you're still within the lock-in period. So some people don't keep track of their rates. And some of them say, oh, you know what, Clive, I actually refinanced like a month ago, but I intended to sell the property, and no one told me that if I sell the property, I have to pay a penalty. And I just did it. So can I go back and reverse the decision? I mean, usually the banks would say, hey, you've already signed on the contract. We have the prerogative to charge you a penalty for that.
Yeah. Or you just wait out the lock-in period, right?
Yeah, but some people maybe don't have that ability to do so because of their own personal constraints. But that's where I would say that I think the banks are also quite flexible in that sense. Like they may say, okay, you know what? I'll charge you a penalty first.
Okay.
But if you bring the loan back to me later, of a certain amount, and the amount usually has to be higher than what you have right now, I may consider waiving it off.
How many times have you refinanced or repriced your own mortgage, Clive?
Many times. Many times. It's
10 times?
Okay, maybe not so many times.
Okay.
Maybe, I don't know, 4?
4 times?
5 times,
Wow.
maybe.
You're very hardworking. You're very diligent with keeping
we
it
have,
tight.
we have to be. Yeah.
You are a mortgage advisory after all.
Yes.
And any plans to refinance now that the interest rates are coming down?
Well, I'm still stuck in the lock-in period for my current mortgage.
So I'll check in with you next year?
Yeah, probably next year.
Okay.
I will do something next year for sure.
Clive, you were great to have on the show. Thanks very much for being our Money Talks explainer today.
Thanks for having me. Lovely to be here.
Are you confused about a money topic? Do you want a financial term explained? Well, this is the place to do it. Tell us, and it will happen on Money Talks Explains. Email us at cnapodcasts@mediacorp.com.sg.